My name is Margus Sepp, and I am the head of trading at Fastflow Finance. Today, I would like to discuss a topic that may seem simple, but is actually one of the most important lessons in professional investing. Why simplicity often beats complexity. Many people believe that becoming better in financial markets means adding more. More indicators, more strategies, more information, more charts, more opinions. They believe that the more complicated their approach becomes, the higher their chances of success. But in reality, professional investors often move in the opposite direction. They simplify. Because the goal is not to collect more information. The goal is to understand what information actually matters. When beginners enter the market, they often search for certainty. They add more tools because they believe complexity will protect them from making mistakes. They use dozens of indicators. They follow countless opinions. They constantly search for the next signal. But eventually, complexity creates a new problem. Too much information can make decision-making harder. Instead of creating clarity, it creates confusion. Professional investors understand that markets are already complex. The solution is not to add unnecessary complexity on top of it. The solution is to create a clear framework for making decisions. A professional does not need 50 indicators telling them the same thing. They need to understand the market environment. They need to understand risk. They need to understand probabilities. They need to understand the reasons behind their decisions. Because successful investing is not about having the most complicated system. It is about having a system that you can consistently follow. One of the biggest differences between beginners and professionals is the way they approach information. Beginners often collect information. Professionals organize information. Beginners ask, what else can I add? Professionals ask, what can I remove? Because every unnecessary element creates additional noise. And in financial markets, noise can become expensive. The best traders are not successful because they predict everything. They are successful because they can identify what matters and ignore what does not. They understand that simplicity does not mean being basic. Simplicity means removing distractions and focusing on the factors that truly influence decisions. Think about the most successful technologies and businesses in the world. Many of them became successful because they made complex things easier for people. They removed unnecessary steps. They improved the experience. They focused on what truly mattered. The same principle applies to investing. A good investment process should be understandable. It should be repeatable. It should be disciplined. Because when markets become uncertain, complexity often creates emotional decisions. A simple and clear process creates confidence. This does not mean that professionals ignore data. Quite the opposite. They analyze enormous amounts of information, but after analysis comes the most important skill. The ability to separate signal from noise, the ability to focus, the ability to make decisions based on what matters most. Financial markets will always be complex. There will always be new technologies, new assets, new strategies, new opinions, but the principles behind successful decision-making remain surprisingly simple. Understand the market, manage risk, stay disciplined, think long-term. The best investors are not always the ones who know the most. They are often the ones who understand what is truly important. Because in investing, simplicity is not a lack of knowledge. It is the result of experience. Beginners often make things complicated because they are searching for answers. Professionals simplify because they understand the principles. And over time, this difference becomes one of the biggest advantages in the market. Thank you for your time, and I look forward to seeing you in the next video.